Economist and financial professor at the prestigious Wharton School, Jeremy Siegel, was in San Diego last week, and he told me he thinks the stock market is a little undervalued. The market took a slide early this year, but now seems to be recovering.
Hard to know where we're going to end up in terms of, where we're at 17,000 on the Dow. I think we could get 18.5, maybe 19. A lot of, risk in the short run, always in the stock market projections. But once those earnings start coming in above a year ago, which I think we're now going to get to an era of good comparisons, we're going to see a good market.
What about people whose investments in energy stocks have taken a beating because of the low price of oil?
As I often say, when oil went from 110 to 60, that was good for the U.S. When it went from 60 to 26, that was not so good. The fact that it's back up to 40 is a much more comforting situation. I think that rise is positive. I don't think it's ever going to get to 100 again. I think we're going to see it going maybe 50, maybe 60, but I tend to doubt it will go above that level.
Because there's just too many sources for oil?
Too many sources, and demand is really on the wane with the developments of alternative energy sources.
One last piece of advice, Siegel says new retirees should invest in stocks. After all, he says, if you're just turning 65 now and you're in good health, you can live about 20 more years at least. And stocks have a better return than bonds right now. I'm Rob Nicoleski reporting.